Okay, good afternoon, folks. If I can just do a sound check. I came on last night and gave a bit of a spiel and was quite proud of myself, and then got back in the chat room and apparently I had my my mic on mute and no one heard me. So can we hear me okay today? Okay, hi Tarandon. So we can hear me? I know there's a bit of a delay, sorry about this. It's working, okay, good stuff. Okay, hope you all been safe over the last 30 minutes or so. We had the numbers out in the States. Bit of a Thanksgiving gift for the dollar. Durable goods came in much more than expected at 4.8 versus 1.5, and it's ignited the dollar, as you can see on the charts here. We've broken through the major level in the dollar index, up now above 101, and happily that. It's interesting to see how that reacted in the yen immediately after the announcement. Yen shot up straight up to 112 and then had an immediate pullback. Pretty much what I was saying yesterday about buying the rumors, selling the facts, and so anyone that was trying to get long there around 1190 and 1200 soon got stopped out on the way back down again. So now someone in the chat room just asked me about the dollar, about euro yen. I just want to have a quick look at the euro yen. It's not something I actively trade, but I thought we'll have a look now that someone asked me. I can't remember who it was now, but it's there somewhere. So euro yen is going to be here. So euro yen now obviously euro yen is the euro and the yen have both been considerably weak pairs recently. Obviously the yen being weaker of the two, with the Japanese central bank intervention and so forth, and their determination to keep rates where they are in zero to negative territory. But it's been a great look at the 4-hour chart. It's been a great trending market. Now I haven't been trading this, but it's just been perfect for the trend continuation trader, of which I am one. I say I haven't got involved in this, but in a way I wish I had. But at this level now, certainly at these at 118.40 level, I certainly can't get into a buying mode at this moment. And if you look further out to the daily chart, this is quite significant. This level. Okay, so this level was last tested back in July, or what was it? Middle of July, and there we are, July the 17th or 18th or something like that, around these levels. And then since then we've been pretty much below it, and we've been meandering in a range below that. But in the last, certainly since the beginning of October, we've taken on the trend again and hitting back to these levels. So this is a key level in the euro yen, and if indeed we do break this, we're going to be smacked back into this 200 moving average, which might see some pullbacks. If that happens and we actually break this level where we are now, bounce off the 200 and have a pullback, well, that's when I might be getting back in. So I think this level, which is going to be resistance, could end up being support if we touch and bounce off that 200 moving average. So trend continuation player. Thanks to whoever that was in the room for highlighting it to me, but it's something I'm going to be looking at over the next while, over the next few days, to see if, or next few hours indeed, if we do break off that 200 level, 200 moving average. Right, what are we talking about today? Today we're going to be talking about the psychology of trading. Okay, and as we spoke about in the week. It's PowerPoint working. I just pulled this slide from the week, from last week. Sometime we put this out. Something I did a while ago, but it's significant. The psychology of trading, and does it matter? I think is the headline of the session today. And of course, it matters. It's 60% of what makes a successful trader and what does not make a successful trader. So it certainly is a key topic, and it's one of the topics that gets the least attention, quite honestly. Certainly, when you see all the all the chats and the commentaries out there, the people are talking about levels and supports and resistance, but really when you're learning to trade, or when you want to become a consistently profitable trader, psychology plays plays a very significant point in that. Now, I think one of the key points that a trader coming into the markets for the first time, in order to get his head around psychology, really has to ask himself one question, and that is, why do you want to learn to trade? You know, what is it that you actually want to, get out of trading? A lot of traders just, have all sorts of reasons. I've just listed a few here. Some of them are a little bit tongue-in-cheek on the left-hand side, but over the years I've heard all sorts of reasons why people want to start this trading endeavour. But you've got to be clear on this, and if you can start at this level and get your head around it, then obviously the emotions down the line might become a little bit more understandable, the emotions that you're certainly feeling. Okay, a lot of the reasons I hear is make lots of money in a short period of time. Wow, hear that all the time. Yep, make lots of money in a short period of time. Right, give much more reference to that than is needed. You hate your boss, and it's this is your ticket out of here. That's another reason why people want to start trading the Forex markets. This is their ticket out of the dull life that they have and the work environment that they have. Your mate's just bought a new car and you want one as well, so let's go and trade the FX markets because you're not going to get a bonus this year, so let's trade the FX markets. And it's great fun, isn't it? We all like the fun of video games. I know my daughters do anyway. But trading Forex is great fun, So these are the reasons that some people get into trading. I would say that most probably these are not the right reasons to get into trading, although they are reasons, certainly. More valid, again, you want to learn a new skill to give you some financial freedom in the long run. Well, yeah, that's a valid reason, I mean, it's not a game. I mean, I'm sure if we all were multi-millionaires, we maybe wouldn't be doing this at all. We'd be all sitting there doing something else. So yes, it's to give us financial freedom in the long run. I think the important point there is it's the long run. It's not going to happen overnight. You can work from anywhere in the world. For me, this is important. I mean, and it's very, it's June, July, July, August. My kids are off school. I go to Thailand. I've got a villa in Thailand there, and I work from there. So, 6 months of the. Good. I have muted it. Yeah, 6 months. So 6 weeks of the year, I'm working from my villa in Thailand, and I can do this from anywhere in the world. Of course, not everyone's there at that level, but it's something that I actually relish. The fact that I don't have to stop working when I go away. So for me, that's very important. Now, you don't have to answer to anyone. You are your own boss. Well, I don't know if that maybe is a bit subjective, depending what your spouse or partner is like. But really, if you are a professional trader, ultimately you only have to answer to yourself and, of course, your family. Okay, but I think the important point here is whatever your reason to want to learn to trade or to become a trader, it is a personal challenge, and with that personal challenge comes its pressures. No one likes to fail. All these reasons here are indeed emotional reasons, and at the end of the day, we are human beings, and we do have emotions. And the only time you will not have emotions is either when you're sleeping, well, sometimes you do, of course, you're dreaming. But when you're dead, again, that's not advisable. But when you're dead, that's the only time you really don't have emotions. We all get elated when we have winning trades. We all get deflated when we have losing trades. It doesn't matter how long you've been in the markets. I had a losing trade this morning, in fact. I thought, oh damn, I'll talk about that in a moment. Actually, it's my own fault for that one. But the emotions of winning, the emotions of losing, these are all common emotions. And a lot of educators out there will tell you, trade without emotion. Learn to trade without emotion. And I've been trading for 30 years, and I cannot trade without emotion. It's something that I challenge anyone to say that they trade without emotion. Even if you're trading small account sizes, small pips, it's still a very emotional. Even if you're trading demo accounts. I remember I used to get really frustrated losing on a demo account because no one likes to fail. So trading with psychology is not learning to trade without emotion. I think, trading in general, you have to trade with emotion, but you have to accept the emotion that you're going through. You have to understand the emotion. You have to appreciate the emotion. And if you can appreciate and understand the emotional place you're in at that time, you're going to be halfway there to combating it, or certainly not letting it affect your decisions. And that's the main thing. We need to understand we've got emotions, but don't let it affect our trading decisions. Okay, one of the key points here, I think, is very important, is understanding reality is the first step to control your emotions. I've got to really skim through this actually, because Jason's starting in about 20 minutes as well. But you've got to understand the reality to help your emotions. Now, first of all, let's look at reality. You're not going to make a living by an automated trading platform, trading robot for $99. We've seen them all advertised. It's not going to happen. Don't think you're going to come into this and get depressed and fed up and start beating the cat because it hasn't happened. I can tell you now, saving $99 is not going to work, so save that emotion off the bat. Okay, a successful trader makes money over the course of time and is not married to any one trade. This is very important. You shouldn't be, as I said, everyone gets emotional, but you try not to get emotional because of the last trade. It's not about the last trade. It's not about the single trade. I think we all know this, but I'm just maybe telling some home truths here. Now, trading is not a get-rich game. This is slightly related to the point one here. You have to put time into this. It's not just going to happen. You've got to put time into it. So don't, again, go out beating up the family just because it didn't work today. You've got to put time into this and work at it. It's a long journey that you're on here, and certainly that's one of the reasons why we are setting up this premium room, is that we can help you in this journey. Whether you're just firing out trades here and there and buying this and selling that just because it looks good at the time. This is a long journey to become consistently profitable, it's not all about the one trade. It's a numbers game, and you've got to put the time into this. And you've got to think in terms of probability. Probability really is. It's about one of the only qualifications I got at school was math statistics, and probability is a main part of that. Probability is just what I base most of my trading on. A big sample of trades. Okay, consistent profits returns with proper money. Let me start that again. Consistent profitable returns with proper money management will create wealth in the long run. There's that word again, the long run. It's not a matter of just doing it in the short term and giving up. It's a long journey that you're on. Okay, and you're not going to give up your day job trading $1,000 account. Nothing wrong with trading $1,000 account. I'm sure there's many people in the room that are trading $1,000 accounts, and there's many people in the room that would love to have $1,000 that they can put into a trading account. But get real, you're not going to give up your day job by doing that. You're learning a career, a new career, a career that's going to hopefully give you financial freedom at some point down the line. But don't think you're going to give up your day job immediately. As I said on one day last week, if you can consistently return a good P&L curve over a long period of time, even starting with $1,000, you're going to get people happily giving you money to manage for them. So don't give up with 1,000 just because you've got 1,000, but you're not going to give up your day job immediately on that. So what are the main emotions when we are trading? Okay, I've got a delivery coming at the door now, which I really should be getting, but I'll have to leave that. What are the main emotions that are coming? What are the main emotions common to trading? Okay, we all know the main emotions. They are fear, greed. Well, let's talk about fear first. Fear. Now, why would someone suffer from fear in trading? Well, possibly because they're uneducated in the field. They don't really know what they're getting into. That's a common reason why people are fearful of trading, because they don't know what they're doing. Well, there's courses out there. There's sites like ours, which I think is one of the best sites in the world to learn to trade, because it's all free. So we don't have any angles on this. But there's plenty of places you can learn this business. As I say, I think you should be staying here with us. An untested strategy. If you don't know the strategy, you don't know it inside out, you haven't tested it, again, this is another reason why you're fearful of placing the trade. You haven't got the confidence in placing the trade because you don't know what you're doing in terms of why you're placing the trade. Over leverage. This is another reason people just bet too much. They bet too much because they've got unrealistic targets. They're trying to achieve something that's not possible, so they're trading 5% or 10% of their account on any one trade. They might make 3 or 4 winning trades, and they think they've cracked it. And then they, of course, well, we know the story. They'll give it all back and more. So over leverage is another common reason why people are fearful of trading. Snapping at profits after a losing streak. Okay, remember, this game is probability. It's a game of probabilities over the course of numerous trades. We all have losing streaks. The most professional traders on the planet have losing streaks. One of the common areas people fall into and get fearful of. We all know we should let our profits run longer than our losses, but we get fearful because we've had that losing streak. We take profits quickly. We snap at those profits because we see something returning a profit, and we don't want this one to be a loser again, so we take our profits too soon. Classic reason. And at the end of the day, if you're continuously doing that, your P&L curve, your equity curve will just go one way, and it's going to go that way. So we want to make sure that we don't suffer from this fear. Understand probabilities, and this fear hopefully will be something you can deal with. Moving stops. People don't want to. They're fearful of actually seeing the account lose, the actual registration of the loss in their account with a minus sign before it. They don't want to see that, so they move their stop. Absolutely carnage to do this. It's a cardinal sin in trading. Moving your stop, unless it's in profit, of course. Trading in profit, moving your stop against you is a cardinal sin, and some people put stops too close. They're scared of losing money, so they put a trade on with the stop too close, and they're not going to give that trade a chance to do what it says on your plan. So think about that, putting your stops too close and moving them. That's fear. The other one is greed. I don't know who came up with this. It's quite a common statement. Bulls make money, bears make money, pigs get slaughtered. Don't be greedy. Take your profits. It's good to take profits as long as it's in your plan that you're not taking profits just too quickly. You've got to take profits in this game. Don't try and knock it out of the park on every trade. Don't try and go for the home run. Don't try and get 10 to 1 on every trade that you do, because it's not going to happen. That's greedy. And risking too much on one trade, well, that fits in with the fear element as well. You're trading. You're greedy, so you're risking too much. You want to buy that new BMW that your mates just bought, and you're getting greedy, so you're over leveraging on that. Not taking profits and looking for more. I've just covered that in the bulls make money and so forth. So that's very important. You've got to take your profits along the way. Revenge, gosh, oh man, this is one of the biggest reasons why the most emotional dangerous trade you can get into is the revenge trade. The moment you take that profit, take that loss, you feel the market's against you. You want to get it back, so you enter the market straight away in the same pair to try and get that money back. It doesn't fit in with your plan. You've taken that loss personally, and of course, and that's just bad. It's revenge trading, and I can tell you now, the market doesn't give a monkeys about yourself. Maybe the people that are not in England here might not understand that expression, but they don't really care. The market does not really care about you personally, so don't take it personally. Trying to recover losses and you're trying to get your money back. It's not about trying to get your money back. It's about sticking to your trading plan to make sure that you're consistently doing the same thing, and the losses will look after themselves by the winners in the long run. As I said to you last week, trading on a Friday evening. You're losing your money for the week, and you don't want to end the week on a bad note. So you go back with a revenge trade. I can't have this happen. It's not going to happen. I'm not going to have a down week. So you go back and you go in, and you lose even more. So that's a revenge psychology or emotion that you really should be avoiding at all costs. Euphoria is almost as dangerous as having a revenge trade. Quite honestly, euphoria. We all get elated. We all get negative. When we have trades, but you have to be aware of these emotions. It can lead to overconfidence. You think you've cracked this trading lark, and you start increasing your leverage, increasing your size, letting profits run longer, not taking that stop because it will come back to you. You become invincible. Well, euphoria. You've got to be aware of that emotion. Okay, feeling of being invincible. Yep, I've just covered that. So you've got to be aware of these emotions as well. Right. So what can you do now to control these emotions? And this is really the crux of this this quick talk today. Remember, it's a 20-minute talk. This is a massive subject. There's thousands of books out there. I've read most of them over the years. So this is just a really quick brush stroke of what you can do to immediately start correcting the emotions that you may have in trading. And that is centered around having a trading plan. You've got to have a trading plan. If it's set out in front of you, and I'm going to talk about this more tomorrow actually, and I might even show you my plan, but you set out, have a trading plan, everything is focused around this. It really does help in your emotions. If you're just shooting from the hip and you're just going in, firing off orders like Rambo, then of course you've got, you've got the emotions that come with that. So you've got to set realistic goals and realistic expectations. Okay, you've got to have a set maximum per risk per trade. If you've set that out, if you're only risking 0.25% or 0.5%, and you know your risk before you, in terms of pips or dollars, as you pull the trigger, if you know that risk, that's got to help you in terms of the emotional, the emotional strain that trade will put you under the moment you pull the trigger. So have that maximum risk defined before you put it in. I don't know. I've seen it before. I don't know how people place trades with no defined risk. What's someone said? You don't enter a room, until you know you can get out of it. I mean, why would you enter a trade not knowing where you can get out? So make sure that, and that's very emotional. So make sure that you have that. Also, make sure that you know that you have a maximum drawdown of your account size before you put everything back for reevaluation. Before you hit the reset button. This is very important. You've got to make sure that you're not just going down the road that's with a plan that's not working. If the plan is not working, it's not working. But you need to know, you need to set a target for that, and then and only then do you pull the plug on the strategy that you've tested, and only then do you pull the plug and reset. What you don't want to be doing is just resetting after 10 trades that have lost, because that's not in your plan. You haven't lost 10 trades on the bounce before in your plan, but it happens. But if you have a maximum drawdown that you're prepared to lose before you set, write that down. So only then do you start reevaluating. Don't leave this into the, don't let this emotions take control of that. Get out of the plan when the maximum drawdowns hit that level. Okay, develop your own strategy. I was reading about this last week actually. Do you buy a strategy? Do you develop your own strategy? There's plenty of good strategies out there for sale. Personally, I think you should develop your own. If you develop your own, you've only got yourself to blame. There's nothing complex about a strategy. You can do a simple, moving average crossover with some price action. I mean, the strategies don't have to be complex. Remember, strategy is only about 10-20% of the whole pie, or 10% I think was on my pie chart there. So strategy, develop your own. If you develop your own, you've got more confidence in it than buying something off the shelf that you really don't know what made it in the first place. So to help control your emotions, know your strategy, and I think to know your strategy, you need to develop it yourself. Okay, so when you develop your own strategy, write it down with a defined set of rules. If you have a defined set of rules, that will take the emotions out of the trade. If this happens, this happens, this happens, I'm going to pull the trigger on the trade. Okay, and you've got to test the strategy, back test it. Jason mentioned this last week. Back testing is great on paper and what have you. The best way to test a strategy, really, once you've done a bit of back testing on your Excel spreadsheets and so forth, and back testing software or T4, forward testing. I'm going to come to something in a moment which I think you'll all find a bit of a challenge. But be honest in your back testing. Be honest in your testing. I personally think you should do a bit of forward testing, as Jason said. Forward testing, certainly, you take it more seriously when you're doing forward testing, and you are more honest. Okay, checklists. I think this is great. I said to you a moment ago, I was getting ready for this talk today, and I took a trade in the euro, and I religiously do a checklist on my trades. But something had happened in the euro. I saw my signal come up on the 15-minute chart in the euro against the US dollar, and I pulled the trigger with it was about 24 pip stop loss, and I got on and carried on doing what I was doing. And I was actually talking to one of my colleagues at the time, talking about today and the premium room next week. I was chatting to him online, and I just got pinged that I'd been stopped out. And while I was talking to him, I looked back at my confirmation charts, and I hadn't confirmed on my confirmation charts what something is in my plan. Okay, I hadn't done my checklist, and I lost money on that. And I've got only myself to blame. I hadn't filled out my checklist, which is my folder's down there on the floor. I hadn't filled out my checklist, and I got into a trade that was just wrong to get into the trade. It could have gone either way, of course. I mean, and rightly so. If I'd have stayed on that trade now, I'd have been making a ton of money. But I wouldn't have hit my profit target. But I hadn't done the checklist, so I've only got myself to blame on that. And keeping a journal. This is very, very important. Keeping a journal is very important, so that when you review your trades at the end of the month, you go back to the journal and you see the emotions that you check it off against your checklist, you check it off against the charts, you check the results. This all goes into your journal, so you can go back and review. Remember, a losing trade costs you money. Get value for that money that you've spent, and learn from it. And you'll only learn from it if you write it down in a journal. If it's just money that you've lost, I lost 24 pips today, I've written it up, I've learnt from that. It's the same lesson I've learnt, quite a few times in the past. I've learnt from that. Well, obviously I haven't learnt if I keep doing it, but I mean, you learn from those mistakes. You cost you money, get value out of that. So keep a journal. This is what we're going to be doing in the trade room. If people are serious about learning to trade, we're going to be doing all this together. We're going to be doing the checklist on your individual plans. We're going to make sure you're sticking to your goals, to your plan. We're going to make sure you do your journal. We're going to review these journals. Of course, if you want us to review them, we're going to be looking at these on a regular basis and working with you and working with your individual trades to see where it deviated and where it kept with the plan. I'm going to have to wrap this up very quickly because Jason's coming on very soon. As I say, getting a mentor in the trading room next week, in the months and years ahead. This is one way that you can really help control your emotions. Getting someone that's going to hold your hand. I still speak to a mate of mine. I told you this last week. I speak to a mate of mine regularly. He's my mentor. I'm his mentor. It's very, very important to work with someone. Otherwise, you're just going to be sitting there on your own with an account and a mouse and leaving it into the hands of bitter lady luck. So I think you need a mentor. Most professional sports people, need a mentor. You often hear managers, we're losing, we're not in the winning mentality. You've got to get in the winning mentality. Mentors, coaches, they help you in that. I just want to leave you now quickly with a challenge which I think most of you will find very, very hard to do. Okay, and that's the 25 trade discipline challenge. I just want to leave you with this now. I think most of you will struggle to do 10. I put down 25 because I'm trying to be nice. I'd ideally like to see 50 or 100 of these, but I guarantee you that you will find it very hard to write out a strategy, a plan. Doesn't matter if it's a very small amount with whatever. Write it down and follow it religiously for 25 goes, 25 trades with a risk reward of 1-to-1 minimum. Okay. Preferably more than 1-to-1, but definitely not below 1-to-1. Do 25 trades following a set plan. I bet most of you give up after 5 or 6 and will then deviate and do something else, and something else will distract you. If you can do 25 trades, I'd say I think 10 will be a struggle for most. If you can do 25 trades, come back and look at your profit and loss at the end of 25 trades. I think if you're taking a strategy with half a chance, you'll be very surprised in your P&L, but also in what you went through emotionally, how you were able to deal with those losing trades and how you were able to deal with the winning trades. Because this is a 25 trade plan, this is a 25 thing, it will help you control the emotions. Well, I'm not worried about that trade because I've got 24 more trades to do. I'm not worried about that because I've got 16 more trades to do in this plan. Do it with small amounts of money so it doesn't change your life, but do that, and I think you'll find yourself that is quite a good challenge to see if you can control your emotions. I'm going to shoot off the phone, off the stream. I'm back tomorrow. Jason's going to talk about it as well. We're both doing a duo on Friday. Jason will talk to you more about that as well. That's at 1:45, I think, GMT. Yeah, keep it safe, and I'll speak to you soon. Goodbye.